All of you can hear me? Good morning, Soumya. Good morning, Asti. How many more are there? Join quickly because today's session is important. Prafulla, good morning. So, as I said, today we are going to do one important chapter, and in next two sessions also we will be doing important portions. General management part, general meetings part. Surinder Kumar, good morning. Homework can be sent preferably by mail because it is easy to read. On WhatsApp, little difficult. And when you send it through the mail, I can reply immediately. Okay, so for just to help you out, once again, I'll write my email here. This is tayal@gmail.com. And yesterday late evening, there was some development. You may be aware of the fact that the coming exam of CA Institute has been cancelled. There will be no May attempt and no July attempt as far as CA exam is concerned, and quite possible same thing is followed by other professional bodies also. Good morning, Komal. So be prepared for something of like that, but if that happens, you will have an extraordinary time available. It is a once in a lifetime kind of opportunity where you can have lots of extra time to prepare for exam and make it sure that you get 100% success in the coming exam. All possibilities are there. Simply you have to work ahead, work more, learn more, and ask for more help. I'm there to help you out. As much as you want, I will help you, but you have to be ready first. Okay, so now we start the session. So everyone, good morning once again. So no more. So I'm going on sharing. So this is the topic which I'm going to start today. So some topic in between I have left. So I'll give you an idea about what that is. Let me take you slightly back about the charges. So once you understand the what is called a charge, then it will be much more easy for you to understand the topic. Okay, and before this, there is another small chapter that is about the deposits. So that I can take sometime later on. And later on means maybe after these two more upcoming sessions, if something more is left, I will teach you on another platform. But yes, I will be teaching. So registration of charges. So what is called charge? I remember somebody requested for the topic of deposits, and I will cover up that later on. Okay, so I'll try to cover up that, and I intend to make you a good and knowledgeable student as far as company law is concerned. Then once we complete company law, I'll take up some other topic as well. Okay, so here we talk about the charges. So what is called a charge? So charge is just one right given to somebody else. One gentleman who's saying that he cannot listen. Is it common for all? Or you can hear me properly? Tell me, please. Okay, okay. So those who can hear and those who cannot hear, so those who are not able to hear, please check your network connections. Okay. So I'm telling you what is called a charge. So charge means, in simple terms, a right to dispose of the property has been given to somebody else. Possession remains with the company, the borrower. The company or the borrower is having the right to make use of the assets, but the right to dispose of has been given to somebody else. And who is that somebody else? Certainly he is the lender. There are certain situations in which the charge is created other than borrower-lender relationship also. For example, if any person commits any default in payment of taxes to the government, whether direct taxes or indirect taxes, a charge is automatically created in favor of the government on the property of that person. Charge gets automatically created in favor of government on property of that person. Okay, so that is the charge created by operation of law. And then there are charges which are created under a contract between the company and the lender. The Companies Act deals with the charges which are created by the act of parties. It does not deal with the charges which are created by operation of law. Is this concept clear? How the charges are created? Once again, charges are created two ways. Number one, by act of parties. Number two, by operation of law. This act, Companies Act, deals with only those charges which are created by act of parties, not by operation of law. I give you example of a charge created by operation of law, that is whenever there is a default in payment of taxes, a charge is automatically created in favor of the government. This act does not deal with the charges created by operation of law. Now your simple question can be, why it is so? Because when it is by operation of law, everybody is deemed to have notice of it. And when it is created by the act of parties, then how do other outsiders get to know about this? So outsiders will get to know only when the information about the charges created by the company on the assets is available at one place. So this chapter does not regulate when to create charge, how to create charge, and in whose favor charge can be created, etc., etc. That this chapter does not deal with. That is a decision or an agreement between the borrower and lender. When the company wants to create charge, in whose favor, for how much amount, and what terms and conditions, that cannot be regulated by law. That is purely regulated by the contract between the company, or you can say the borrower, and the lender. But the terms and conditions of the agreement or the contract and the information about any such contract existing should be available to the outsiders. So this chapter is meant for that purpose. Basic of charge, the chapter of charge you have already studied earlier. There can be a fixed charge, there can be a floating charge, and floating charge gets crystallized on happening of certain events, and that becomes a fixed charge. right? So I'm not taking you into those details. Or you want to hear that? You understand the concept of charges, or I need to explain you brief? Hmm. So, hmm. So when the charges are created by act of parties, okay, let me make use of the board because I'm more comfortable when I use the board rather than simply talking. For last 25 years, I've been doing that using board very extensively and always drawing my charts. So that makes the thing simple for you to understand. Okay, so let me make use of the chart. So here we have the concept of charge. Charge means transfer of a specific right in relation to assets in favor of some person. Now, this itself is a very important. Let me stop sharing for the time being so that you can see it in a bigger screen. Okay, can you see now? It's much better. The transfer of. Now, this word itself is very important because transfer, this is a voluntary action. Transfer itself is a voluntary action. Okay, just take note of that. I'll change the screen again. So, transfer of very specific right. Not all the rights are transferred when the charge is created. Very specific right is transferred in favor of some other person, and that is by the voluntary action and in favor of some person, that usually this person is the lender. Okay, now this charge can be of two types. This is created by act of parties, and this is created by operation of law. Right? Operation of law, for example, default in payment of taxes. Charge automatically gets created in favor of government. Okay. And this this act does not deal with this kind of charge. Act is dealing only with the charges which are created by the act of party. Right? Now, these charges can be again divided in two parts. This can be a fixed charge, or this can be a floating charge. Fixed charge, this is on a specific asset, which is identifiable, which is distinguishable from any other similar or identical asset. And floating charge, this is only on current assets. In this case, no disposal by company. Company cannot dispose of these assets. Asset is very, very specific. In case of current assets, those are allowed to be disposed of, but a certain level of a stock must be maintained. In this case, company is allowed to sell, but maintain the stock. Okay, so this is the basic about the charge. Now, when the floating charge has been created, here itself you can keep on adding. Here itself you can add. A floating charge gets converted into a fixed charge. Who said the voice is breaking? Is it a common complaint? So floating charge gets converted into a fixed charge on happening of an event specified in contract. Priyanka, Monica, check the network connections, and commonly people can tell me whether they can listen me or hear me properly or not. See what happens when I'm standing up and writing on the board, I'm slightly away. Okay. So that's why the sound gets maybe disturbed, but it is clarity is there. Okay. So what I suggest is that even if there is a problem at this moment, every video will be uploaded on YouTube. Right now, make a note what I'm writing on the board because these charts are not available anywhere. In the first lecture I told you that I started teaching law with the help of charts, and today it is practiced all over the country. Every person who is using the chart for teaching is directly or indirectly my student. Right? Make note of the chart, it will help you. Sound may not be clear, and that's why I'm writing on the board. Okay. So complaints are welcome, but option is available. And if something is not clear, I'm available to you on personal basis. Right? Be a part of them. Okay. So now standing up again. So floating charge gets converted into a fixed charge on happening of certain event as specified in the contract, and this is called crystallization of charge. So what is called the crystallization of charge? So crystallization of charge simply means conversion of a floating charge into a fixed charge. And that is on a happening of a specified event. What is that event? That event is specified in the contract. Right? Now, let us take an example. For example, failure to repay for 3 months, or you can say 3 EMIs. This is an example. This may be there, may not be there. This may be 3 months, this may be 1 month, this may be 6 months. Any period can be there. Or this can be commencement of winding up. This is always there actually. Whenever the winding up commences, all floating charges get converted into a fixed charge. An automatic conversion of floating charge into a fixed charge, that is called crystallization of charge. Okay. Now, something more about charges. In relation to charge, there are three events. One is creation of charge. Another is modification of charge. And third thing is satisfaction of charge. So in relation to charge, there are three things. There is the creation, there is the modification, as well as there is satisfaction. Now, when the charge is created, certain particulars about the creation of charge have to be registered with the ROC. And rather, I must say, registration of creation, registration of modification, registration of satisfaction, all three are required to be registered. So when the charge is created, certain particulars which are required to be registered, those are document by the charges created. Number two, amount for which charge is created. Number 3, mean terms and conditions on which charge is created. Number 4, in whose favor, who is the charge holder. Number 5, assets on which charge is created. These are specific particulars required to be registered with the ROC at the time of creation of charge. Right? So first is document by which charge is created. Number 2, the amount for which charge is created. Number 3, the terms and conditions on which charge is created. Then, in whose favor, who is the charge holder, and last is the assets on which a charge has been created. Okay. So these particulars are required to be filed for registration, and primary responsibility of filing the particulars for registration is of the company. But where company fails to do that, then the charge holder can also get filed for the purpose of registration. So that's a matter of choice, or not a choice, rather, first obligation is of the company, and subsequently it is for the charge holder. So if company fails to file, then he can also do that. Okay. Then modification. This is required only when created by parties. Only when that charge is created by the parties, registration is required. But modification is slightly different. Modification may be contractual, modification may be by operation of law, and every modification in any of these, that is also required to be registered with the ROC. So here we will write every modification, every modification, whether by act of parties or by operation of law, required to be filed for registration with ROC. Now tell me, any question on this, or it is clear? There is a difference between creation and modification. Creation by the act of parties is required to be filed, and modification, whether it is by the act of parties or by operation of law, both are required to be filed for registration. What is called a satisfaction? Typographical error, no, that is not an amendment. Repayment, completion, when payment is done, when entire amount is repaid, repayment done. Entire amount means what? Completion of charge is called satisfaction. No, this is not the correct language. Charge amount, principal and interest. In addition to interest, there can be some other amount as well. Full or part payment when the borrowing is repaid. Okay. So you have some basic idea But what is really important, that is some portion is missing. Maybe that you have in your mind, entire amount of charge is paid. No, slightly let us change the language doubly. Every amount due to the lender in relation to charges repaid in full. You have the intention correctly, but what you are writing, that is not correct. Right. Modification of charge, it is again same. Everything, whether it is creation or modification or satisfaction, the primary responsibility of filing for registration with the ROCs of the company. Okay. So now let us write that what is there in the satisfaction. Okay. Objective is conceptual clarity. And it took me years and years together to understand. And I want you to don't spend so many years and learn it faster. Okay. So satisfaction means full payment of any amount payable to charge holder in connection with the charge. Now, how it is different than what you were saying? It is different. I said full payment of any amount payable to charge holder in connection with the charge. Theoretically, you have read what is repayable, it is the principal amount which is repayable, plus you have to pay interest. There can be penal interest, something more. Now assume that some kind of inspection or verification of the property on which charges are created got done by the charge holder and that amount is payable by the company. Or company failed to file the particulars of charges, those were filed by the charge holder on payment of late fees, that is recoverable from the company. So that is their full payment of any amount payable to the charge holder in connection with the amount. That is called a satisfaction. So that is also required to be informed, to be filed for registration with the ROC. Every time it is the primary responsibility of the company, but the charge holder is also having a right. And his right begins after only the obligation of company or company has failed to discharge the obligation. As long as company is acting within the time specified, the charge holder will not have all these rights. So the charge holder gets a right only where the company fails to discharge the obligation within the given time. Okay, so this is about the charges. I'm not going to the details or section wise. Now you can have any question in relation to charge. Any question in relation to charges before we embark into the next chapter about the management and meetings? You are welcome to ask the questions. What is condonation of delay? Condonation is when you are required to file the document within the time specified, and that usual time is 30 days from the date of creation of charge. And if the company fails to file the document within the time specified, they can approach the ROC himself to allow the extension of time on payment of additional fees. So when he allows you extra time for filing the document, that is called condonation of delay. Whenever the charge is created, whether the property is in India or outside India, doesn't make a difference. If whatever is the company incorporated in India, The particulars of creation of charge, creation, modification, satisfaction of charge, all are required to be filed with the ROC. There is no limit to the delay. See, understand this concept. This is a very important concept to understand. Hmm. Let us assume a situation where the maximum delay is there, and Act says that the delay up to 6 months can be condoned and not after that. What will happen? That charge holder will always be unsecured? That is not the case. There is no time limit up to which condonation can be allowed. Who will allow the condonation? Who will allow the delay? That is a different story. Right? By registration, only purpose is that outsiders are deemed to have notice when the particulars are registered with the ROC. The charge holder prima facie does not become unsecured because his registered document is there. So if he is having a proper document by which charge has been created, even if particulars are not registered, he is not unsafe. By primary reading, you can understand that he will be unsafe. No, he is not. He is having a registered document. He is having a proper document. So not only companies, that there are other laws as well. Because of that, he will not be unsecured. Fulfillment of charge and not filed satisfaction. What is the situation? If satisfaction is not filed, that is a problem more of the company, because that much amount will always be reflected as if it is still there with the company. It is in the interest of company to file the satisfaction of charge. On a liquidation means what? If the same assets are placed with more than one person, so not if you understand the Transfer of Property Act and there are other laws applicable, so the first agreement will certainly have priority over the agreements made later on. So that will certainly be a disputed issue, and that is why this law is. So when the particulars are filed, practically what will happen? So when you are in profession, nobody will release any money. So whether it is a bank or financial institution or NBFC, nobody will release any money until the particulars have been filed and the registration certificate has been obtained and given to the charge holder. So there will only be an agreement, no money. So earlier, I've seen that kind of situation where money is released and we file the particulars later on. Right. So that kind of situation I've seen 30 years before. But in last 20 years, or maybe 25 years, I've not seen even a single situation where the money is released by the lender and the charge is filed later on. So you cannot imagine a situation now where the particulars are not filed for registration and the money has been released by the lender. Right? So it is only theory that first of all you create the charge. So creation of charges by agreement, file the particulars for registration, and only then money will be released. So no dues letter, when the money is fully paid back, then only you can file the satisfaction of charge. And when the money is fully paid back, no dues letter is usually issued by the lender. And where they don't issue, then they sign the document which is being filed for the purpose of satisfaction, that there is no dues outstanding. Charge does not get invalidated for registration. Who's the manager or receiver? Okay. So this is a person who's appointed by the court in case of default by the company for taking over the possession of the assets. He will be called as manager or receiver for this purpose. Is this all? We go ahead with the new chapter. Okay, so now to go to the new chapter. So So now we are in the chapter which is, according to me, one of the most important chapters for the purpose of exam, that is management and administration, starting from section 88, going up to section 122. And this will certainly not be completed today. So today, then we have another lecture on 7th. Then we will try to complete this on 7th, and on 7th and 9th, we will also do some portion in relation to directive. Okay, and thereafter we will make some other arrangement if it is not further extended by the use. Okay, so register of members. This I'm not doing. I'll leave it to you. But here comes. Yeah. Section 8, and this is a very important section for understanding. Have you ever come across a situation where a declaration has been made about the beneficial interest and where it is relevant? Where this is relevant? Further charge. Okay. So somebody is asking me what is further charge. You understand the concept of first charge, second charge, pari passu charge? First charge, second charge, pari passu charge. Three types of charges are there. Can anybody tell me what is first charge, what is second charge, and what is pari passu charge? Hmm, hmm. So, in the year 1997, there was no book available about charges. Every banker used to have some problem to understand what is charge. And that was the time my book was published about creation, modification, and registration of charges. And I had taught that topic almost in every bank. Yes. So the last explanation comes very good. This is first charge holder get the first right over the property. Second charge holder will have the second right to pari passu equal right to the holders. Okay. Now let me explain this slightly on the board. What is the meaning of these charges? First charge, second charge, pari passu charge. Okay. Now, what you have to understand is that in case of in a business, the loan is not based on the value of the property being offered as a security. Okay, just give me 2 minutes. Just 2 minutes, please. I'm coming back in 2 minutes. So now back. So as far as business loans are concerned, these loans are not primarily based on the value of property being offered as a security. Business loans, these are based on earning potential of the business. How much money can be earned by the borrower and what are the chances of its being repaid? Therefore, there can be one property, this is shown as a property. The value of this may be 10 crores, right? But the activity being carried on here, this is having a capacity of earning 25 crores in next 10 years. This is the value, and this is earning potential, right? Now, this person who's having a value worth of having a property having value of 10 crores, assume that he borrows 10 crores from a bank. A is the name of the bank. Business is doing well. He is properly repaying bank A. He needs more money. Now he can approach bank A or he can approach somebody else. He can further borrow rupees 5 crores from bank B. Now, in this situation, when the money was borrowed from a bank, a charge was created in that favor that was called first charge, right? And when the second borrowing was there, here comes a concept of second charge or pari passu charge. If everything is going good, bank A may agree that we will release the charge in favor of B bank, which will be pari passu charge. That will be pari passu charge. Now, pari passu means in the event of this charge being liquidated, they will get back the money in proportion of the amount outstanding or due to them. In this situation, in the event of liquidation, these two banks will get the money in the ratio of 2:1 out of the amount realized. That is called a pari passu charge. And that can be created only with the prior consent of the our first charge holder. In case of second charge, if it is liquidated, first of all, the money due to bank A will be repaid in full, and then whatever balance is there, that only can be taken by bank B. That is called the second charge. For creation of second charge, prima facie, you don't need approval of the first charge holder, but for creation of a pari passu charge, always the prior approval of the first charge holder is required. So that is the difference between first charge, second charge, and pari passu charge. Any more questions? I hope there is nothing more. Abhi, why are you after section 87? That is a very small section. Read it clearly. That is, Section 87 is talking about the rectification by the central government. So when the particulars are not properly registered, the government is having a right to rectify that. In pari passu charge also, the first charger will have more priority. No, pari passu there is no priority. Everybody is equal. So pari passu charge simply said that more than one borrower are at the same footing, and in the event of liquidation of charges, amount will be distributed in proportion of the amount due. So I had taken out this sections, section 89. I was asking you this question: what is the meaning of declaration of beneficial interest in the shares? Have you seen any example of this and when it becomes relevant? When it becomes relevant. Are you aware of the concept of wholly owned subsidiary company? No, it is not the case of legal hires. Wholly owned subsidiary company means one company is holding entire share capital of another company. What is section 3A? What is section 3A? No, that is talking about that if number of members fall below statutory minimum, the remaining members will have unlimited liability. So what will happen where one company is holding entire capital of another company? Number of members are less. And section 3A says that if there is unlimited liability, why a company will take unlimited liability for the subsidiary? Think of it. Why a company will have unlimited liability for the subsidiary, right? And liability of the members is always limited. So this section says where shares are held in the name of one person, but some other person is having beneficial interest about those shares. Ownership of somebody else. Then the person in whose name shares are registered as well as the person holding beneficial interest, both are required to make a declaration to the company, and because of that declaration, officially or legally number of members are more, but effectively those are less. And by making this declaration, holding of share capital in the name of another person, interest of investor gets protected. Okay, let me draw that on the board again to help you out the concept of beneficial interest, how it is relevant. Okay, so take example that company A Limited. This is a public limited company. And there is another company called B Limited. This is having capital of 5 crores. Okay. Company A Limited, Company B Limited, and Company B is having capital of rupees 5 crores. Divided into certainly 50 lakh equity shares of rupees 10 each. And A Limited and B Limited are connected as holding and subsidiary. This is a holding company, this is subsidiary. And this is a wholly owned subsidiary company. This is wholly owned subsidiary company. Okay, means entire capital of B Limited is held by A Limited. And if that is the situation, Section 3A becomes applicable. And Section 3A says remaining member will have unlimited liability. Why company A should accept unlimited liability for company B? It will not. What it will do, out of these 50 lakh shares, this shareholding will be divided in two parts. 49 lakhs 99,994 shares will be registered in the name of A Limited. 49 lakhs 99,994 shares will be registered in the name of A Limited, and there will be 6 more representatives of A Limited. Those will be M, N, O, P, Q, R. Everybody holding just one share. And they are holding shares in the capacity of representative of A Limited. All of them hold shares as the representative of A Limited. In this situation, these 6 people will give a declaration to B Limited that these shares registered in our name are actually investment of A Limited. A Limited will give a declaration that these 1 shares each held by this 6 person is actually owned by us. Because of this situation, minimum number of members as per law will continue to be 7. And A Limited will not have unlimited liability in relation to company B Limited. Is this concept clear or not? Did you know this before? Okay. So this is how wholly owned subsidiary is created. Okay. So whenever you get into a corporate as a company secretary or you are in practice, this will help you. How you can create wholly owned subsidiaries, right? Professionally, never tell in advance that you can create wholly owned subsidiaries without unlimited liability. Okay. So initially, you can always show to the people section 3A. Minimum 7 company itself is also having one share. Company is already having 99% shares. So only 6 more people are required. That's why I went up to 94. Abrimani, Abhirami, sorry. Hmm. So when company itself is one member, how many more members are required? 6 or 7. So only 6 more are required. So that's why very specifically I gave you that number. And this is also a condition. You cannot hold more shares in the name of representative when it comes to fulfilling the requirement of minimum number of members. That's why they are required to hold only one share each. More can be held in the name of other person, but not for this purpose. Right? And let us get back to, aren't they? No, no, no. But legally, the name of 7 members are there in the register of members. It is a technicality, but how to take benefit of that, right? Otherwise, the concept of Preeti, you are still asking me in this question, what is the benefit of such arrangement? I give you one of the best examples why the beneficial holding appears. Okay. Now, going back to the what this says. This says where the name of person is entered in the register of member of a company as a holder of shares in that company, but who does not hold the beneficial interest of the shares, such person shall make a declaration. Right? So he is required to make a declaration, and subsection 2 says even the person whose beneficial interest is held by somebody else, he should also make a declaration. So every person who holds or acquires a beneficial interest in the share of a company shall make a declaration to the company specifying the nature of interest. So when you see on the left side, what is mentioned therein? Subsection 1 and 2, declaration by the registered holder as well as beneficial owner. So company will never get to know who is the beneficial owner unless this is informed by the owner himself, unless a declaration is made by the registered holder that beneficial interest is held by somebody else. Right. Now both are required to make the same declaration. Suppose I make some investment registered in your name. Right. I can always give a declaration that the shares held by so and so person is actually my investment. But if you don't give a declaration, my declaration is useless. I can always make a declaration about anybody that so and so person holding so many shares is registered in his name. Actually, that is my investment. But that is useless. So both are required to make the same declaration. If I make investment in your name, you will give a declaration to the company that these shares registered in my name are actually owned by this person. I will give a declaration that these many shares registered in the name of yours are actually held by me. Then the declaration becomes valid, right? And this is also one of the reason for removal of black money or illegal indirect holdings, indirect control of the companies from the market. And not making a declaration, what is the impact? What is the impact? The impact will be that the shares which are registered in the name of another person, if the declaration is not made by both the parties, the interest of beneficial holding will be lost. Yes. can be even in the case of individual also. Individual can also do that. Okay. And what happens if the declaration is not made? That is in subsection 5, and beyond that also it is there. See number 8. This is very, very important. This says no right in relation to any share in respect of which a declaration is required to be made under this section, but not made by the beneficial owner, shall be enforceable by him or by any person claiming for it. What is the meaning of this? When the declaration has been made by the beneficial owner that the shares registered in so and so person's name are actually my investment, the registered owner has also given the same declaration, then the registered owner will not be able to transfer those shares without the consent of the beneficial owner. That is the advantage. If declaration is not made, what will happen? I register my investment in the name of somebody else. I don't make a declaration to the company. Tomorrow that person sells the shares, gets the money and runs away. I cannot do anything. But once a declaration has been made, then the procedures are such that that transfer will not be given effect unless I give a consent to that transfer. Subsection 8 is for that purpose. This says no right in relation to any share in respect of which a declaration is required to be made under this section, but shall be made by the beneficiary or shall be enforceable by him. This is more important. Penalty, that is okay. That is what government is making a penalty, because in this situation, black money can be there in the market. So government is making it penal action, or rather it is making an offense which is punishable with fine for not making the declaration, only because this way companies can be controlled indirectly. So this is also for that purpose, so that who is actually controlling the company, that is also known. And it is also for elimination of black money from the market. And it is also for protecting the interests of the beneficial owner. So multiple reasons because of which this section exists. Okay. Is this clear? Register of significant beneficial owners. This is another provision which was not there in the Companies Act 1956. So this comes into picture only when 25% or more is held as a representative. So practically it is difficult to see this kind of section in operation. Here comes power to close register of members and debenture holders. Why to close register of members? Why to close register of debenture holders? Whenever dividend is payable, interim dividend or final dividend, or any right issues to be done, or any bonus issues to be made, you must have a record updated up to a certain date. Okay, so you can give that right to the people whose name appear in the register of members or register of debenture holders as on a particular date. So in case of debentures, you have to pay interest. There is a redemption of debentures. In case of share, there is dividend, there is right issue, there is bonus issue, there can be other matters in relation to whom the notice should be given, to whom the annual report should be sent, and number of things are there. So for that purpose, this is an option available to the company, that company can close the register of members and debenture holders by giving not less than 7 days notice, and at any one time the period for closure should not be more than 30 days, and if there are multiple closures of the register in 1 year, aggregate period for which these records can be closed in 1 year should not be more than 45 days. So that I have already given in the left. That maximum period in 1 year is 45 days, not more than 30 days at any one time, and 7 days prior notice is always required. In exceptional situations, and by following a special procedure, period can be or advance notice can be less than 7 days. So closure of books. So that is also referred as a record date, certainly. So record date is for a specific purpose, and if there is no bonus, there is no right issue, there is no bonus issue, still you can close for updating the record as on a particular date. Right. So say for the purpose in the annual general meeting, who are the members coming, who will have a right to come and vote. For that purpose also this can be done. Hmm? So advertisement certainly required, but those are procedural parts. Right now I'm not into that. I'm not going into that much of detail. I'm highlighting the important issues, what are involved in law, so that understanding of the law becomes clear. In this limited time, we can do only this much. Okay. So this says a company may close. So it is not a compulsory. Practically, it is compulsory. Say here, what it is said, the company may close, right? So theoretically, you can say it is not compulsory, but practically, it is always compulsory to close the register of members at least once a year at the time of AGM for taking a stock of the people who can attend and who can vote in the general meeting. So this may close the register of member or register of debenture holder or the register of other security holders for any period not exceeding in aggregate 45 days in each year, but not exceeding 30 days at any one time, subject to giving a previous notice of at least 7 days or lesser period as may be specified by SEBI for or the listed companies which intend to get the securities listed in such manner as may be prescribed. So giving notice, certainly that is the notice required to be published. The notice is required to be given to the stock exchanges. Notice is required to be given to SEBI. Yeah. The next is annual return. Can somebody explain me what is annual return in one line? Annual return in one line. Performance, no. Financial status, no. Abhirami, this is summary of 1 year activity of the company. Absolutely correct. Also add under company law. Not details as at the end of the year. This covers all the changes as far as company law is concerned during that year. Okay. So in summary, we can say that annual return is the document containing summary of all changes governed by company law during the year. So the document containing summary of all the changes which are governed by company law during the year. So what is governed by company law? Company law certainly governs the capital, the director, the meeting of directors, the member, everything is covered there. So once you understand the concept, that is much more easier than what this document is. And in bigger companies, secretarial audit is also required in relation to annual return. So you go through everything, all the records and all the things done by the company as far as company law is concerned during the year, and then this document is filed. Right. So this is something very, very important. Annual return. So not for the purpose of your exam, but otherwise, this is a very, very important document. The updations keep on coming with the disturbing. When the net is on, lots of updations can also keep on floating in. So now back to annual return. So this is every company, no choice, every company. So whether private or public or whatsoever the status may be, hereinafter referred as annual return, the prescribed for containing the particulars as they stood on the date on the close of the financial year. Right. So during the financial year, whatever changes have been made as far as company law is concerned, everything is required to be reported here. So this is a summary of all the changes as far as company law is concerned. It's a registered office, principal activity, particulars of the holding subsidiary associate companies. So last return was filed, and this return is being filed. So whatever changes are there, so this is being reflected in totality. It's a shares and debentures. Clause C has been deleted. The members and debenture holders, along with the changes therein since the close of the previous financial year. So since the changes means what? Including all the transfers made during the year, those are also required to be reported in the annual return, right? And this becomes more relevant in the private or closely held companies, because in case of public listed companies, we simply take advantage of the benefit of this depository, because all the deposit registers are kept by the depository. So the register of the beneficial owners is different, register of member is different. So in the case of listed company, not difficult, but in case of closely held company, every change in the shareholding is also required to be reported. Then it's the promoters, directors, key managerial personnel, along with the changes therein. Any change in the directors. So I said this is a summary of all the changes made. So see here what is mentioned. Any change in the director that is being reported, any change in the key managerial personnel, in the any change in the members and debenture holders, everything is being reported. Then that meetings with the board or class as it is various along with the attendance thereof. Throughout the year, how many board meetings held? Closely held company means any company which has not made a public issue is a closely held company. This company can be private company, this company can be public company. So public company is one which is having a right or entitlement to go to public, but it has not gone to public. 4 board meetings in a financial year, that is minimum requirement. There can be any number of more meetings. There are companies, bigger companies, which are holding meetings every month, right? So depending upon what are the requirements, and this is not asking how many meetings have to be done, how many meetings actually done, who are the directors who of the not only the board but also committees. How many committees are usually there in the company? 3 committees. Which are those? Audit committee, nomination, remuneration committee. Mhm. What is SRC? CSR, yes. CSR committee is also there. You see, these are the committees referred in the Act, but you can create committees for any purpose, right? You can create committees for any purpose. There can be a lending committee, there can be a borrowing committee, there can be a shareholders committee, and n number of committees can be created. So here in clause F, we are talking about the meeting of members or the class thereof, board and the various committees, and then remuneration of directors and key managerial personnel during the financial year. Penalty or punishment imposed on the company, its directors, officer, detail of compounding of offences, appeal made against such penalty or punishment. Everything done during the financial year, right? The matters relating to certification of compliances, then details as we and such other matters. So in nutshell, this is the document containing all material changes that have taken place during the financial, right? So when you are doing the secretarial audit for the purpose of certification of annual return, you have to go through all minutes of the meetings, whether committee meetings or these are board meetings, and the register of members and what changes have been made, what documents have been filed with the ROC during the financial year. Everything has to be examined in detail before you certify the annual return. This is not so easy document to certify. and I avoid signing this document because companies are not open to disclose all the information. Some of the people are very keen to sign annual return. Actually, this should not an easy document to sign. Lots of responsibility comes while signing this. So signing as a company secretary of the company is different. Signing as an outsider, as an auditor, that is different. So I'm talking about as an outsider. So when you are the secretary of the company, everything has gone under your hand during the financial year. So you know what are the changes there and you have to incorporate everything there. One person company, forget. Now CS certification subsection 2, this is the annual return filed by a listed company or by a company having paid up capital and turnover as may prescribed shall be certified by company secretary in practice in the prescribed form. So this is what I was talking about, that I'm not keen on signing this. Number 3 says that the annual return has to be kept on the website and the time of filing is within 60 days from the date of AGM, and if AGM is not held within the prescribed time, then within 60 days from the latest date thereof. The filing is compulsory. So this is not in relation to that if AGM is held only then it is filed. It is required to be if AGM is held within the prescribed time. The time limit for filing begins from the date of AGM within 60 days thereof. And if AGM is not held, then within 60 days from the latest date thereof. Now, what will be the situation if an extension has been granted by the ROC for holding AGM? Then from which date you will count the date for filing this annual return? If there is an extension granted for holding AGM, then from which date it will be counted? Last date means what? Original date or extended date? In that situation, also answer will be same. Either date of holding AGM is the date when AGM is actually held, or the latest date by which AGM can be held. So, latest date may be either original as per law or allowed by ROC as the case may be. Okay, so this date will never be counted from 30th September. Otherwise, we would have simply said by 30th November they should be filed. Now, in the current situation, pandemic situation, general extension has been granted for holding AGM. And when the general extension is there, the time limit for filing this automatically gets extended, right? So your answer will always be same. This is to be filed within 60 days since the date of holding AGM if held in time. In time is what? Either given by the Act or extended by ROC. Ultimately, it is in time. Okay. So this is to be filed within 60 days if AGM, from the date of AGM if AGM is held in time. Otherwise, within 60 days from the latest date by which AGM should have been held. Okay, so that answer does not change, but the understanding certainly changes. Is it true if the AGM gets extended for want of quorum? Would you understand the meaning of the word extension and adjournment? Okay. So AGM does not get postponed because of lack of quorum, meeting gets adjourned. Okay. So when the meeting is adjourned, adjournment means it is deemed to have commenced. Adjournment is a continuation. It is a temporary break. So law does not say that if the quorum is not present, the meeting gets postponed. Meeting gets adjourned. So for the purpose of filing, the date of original meeting will be taken into account, not the date of adjourned meeting. Is this point clear? Okay. So going back to sharing. So here it said filing. So you see why I'm asking this type of question, because these are type of MCQs which can be there in the exam. These can be fill up the blanks. So there's somebody can try to create a confusion and forget everything, even if nothing is there in the exam. Ultimately, in your profession, you are going to face this situation. Then you don't find a clear answer for this, right? My email ID will continue even after 5 years, 10 years. You can always write to me after that time. Okay. So here, filing. Then, if company fails to file annual return before expiry of the period specified, such company and the officer in default, they are punishable. And I told you, punishment penalties are not a part of the exam. Once in a while, somebody can ask you, and they will ask you only when the punishment is very, very severe. Like section 447, that can always be asked in the exam. 447 is one section which is referred in number of sections in the Act where penalties are directed. So provisions, or rather penalty provisions like section 447 can be asked in the exam, but penalties referred in every section being asked in the exam are rare. Place keeping this you can read. This I'm not going through. Yes, now comes important area, annual general meeting. So in the company we have two types of meetings. Okay, let me draw a small chart for you. Let us stop sharing, and then once again we'll come here. So you people are attending other lectures also, online lectures like this? And I don't know about the other faculties. Do they also use the board same way I do that? Do they do anything on the board? See, I have some other courses, and these courses are sold abroad, and whiteboard courses are considered as something a luxury. Those are sold very, very expensive. PPTs are not acceptable now. That is something outdated. Whiteboard lectures are premium quality things. So here, meetings under company law. Okay. Now, when I say meetings, what is the meaning of meeting? It is valid only if it is called, held, and conducted in accordance with Meetings are valid only if those are called. Called means issuing the notice for the meeting. Held. The word held is prima facie related to two things. One is commencement of the meeting and number two, voting. Conduct is also in relation to who will participate, who will not participate, what is to be done, what is not to be done. If all three things are as per law, only then meeting is valid, otherwise meeting is not valid. Okay. Now these meetings can be either general meetings or there can be board meetings. Now general meetings can be annual general meeting or this can be extraordinary general meeting. And this AGM can be called by the board of directors or by the tribunal. AGM can be called by the board. It can be called by tribunal. It can be called by members. As far as board is concerned, there can be board meeting. There can be committees also. So this is a brief about the type of meetings that can be held in a company. So meetings under company law, the first thing is this one. Those are valid only if the meeting is called, held, and conducted. Three words in a sequence. Don't change the sequence. Called, held, and conducted in accordance with the provisions of law, then only meeting is valid. If the notice itself is not issued properly, the whole activity becomes invalid. Called, held, that is in relation to commencement. If meeting is not there or meeting does not commence properly, then even though it is called properly, but commencement is not proper, then conduct will automatically be called. The meeting may be called properly, commences properly, but not transacted properly. Legally, meeting is held. Legally, meeting has been held, but no decision because the meeting has not been conducted. So all three things are important for a meeting to be valid. Number one, meeting called, and number two, held. Number three, conducted properly. Only then the meeting is valid. Otherwise, it is not. Okay. Then, is this portion noted? Or you have any question on this? Okay. So let us remove this part. Okay. Now, once again going up, is the upper portion clear to see? See, the tube light reflection is coming, so I cannot. But anyway, so I said there are two types of meetings mainly. One is called general meeting, another is called board meeting. General meeting may be annual general meeting, may be extraordinary general meeting. Annual general meeting can be called by board of directors and it can be called by the tribunal, while the extraordinary general meeting that can be called by the board, by the tribunal, as well as by the members. Okay, is that portion clear? Let me ask you a question. Do you know this concept? What is called mind mapping? mind mapping, this is visual and graphical presentation of information so that it is easy to I will explain you everything about AGM. The topic is remaining, it is not complete. In between this, something came up. I'm just explaining what is called a mind mapping. So, mind mapping, this is a visual and graphical presentation of the information, and the purpose of that so that understanding becomes easy and it is remembered for a longer period of time. So, all the charts that we do, this is mind mapping. Okay, so mind mapping is, it has nothing to do with your mind, but how to make things easier for your mind to grasp. That is called the mind mapping. Okay, so this is a different concept, mind mapping. And so now getting back to the provisions. So every company, other than a one-person company, each year hold in addition to any other meetings, a general meeting called as annual general meeting. So why it is called annual general meeting? Usual answer, it is held once in a year. But that is not the right answer. Why I am saying? Because and shall specify the meeting as such. So if meeting is being held once in a year, it is naturally annual general meeting. But this is specifically called annual general meeting because annual accounts are placed in this meeting. Annual financial statements are placed in this meeting. And you cannot place annual financial statement in any other meeting. Right? Let here. It is called AGM because annual financial statements are required to be placed in this meeting only. You cannot place financial statement in any other meeting. And if you place that, those will be invalid. Right? And let us fill up the color here. Let us make it bold also. So do you get the meaning why it is called annual general meeting? Annual financial statements can be placed only in this meeting. If you call extraordinary general meeting and consider annual financial statement therein, it does not become AG. Why? See here. specify the meeting as such. What does it mean? In the notice column. So when you issue a notice, even if it is having everything what is required in AGM, but if you don't use the word AGM, it will not become AGM automatically. You have to give that in the notice that this is annual general meeting of the company. Right? And not more than 15 months shall elapse between the date of one annual general meeting of a company and that of the next. That is the time gap between the two AGM. Further, it says, provided that in case of the first annual general meeting, it shall be held within a period of 9 months from the date of closing of the first financial year of the company, and in any other case, within a period of 6 months from the date of closing of the financial year. So, what is financial year? Can you define what is financial year? Right. What is called financial year? Formal definition. Period of 12 months. That was the old concept. Let me go to page number, I think that should be around page number 35. So here we have the definition of the term financial year. Read this carefully because we are talking about the annual financial statements. What is called a financial year? In relation to any company or body corporate, means the period ending first day of March, and while it is incorporated on or after first day of January of the year, the period ending 31st March of the following. I'll draw a chart for this. What is the meaning of financial year? Provided that we're a company or a body corporate, which is a holding company or subsidiary company, that is something different. It has nothing to do for us. Hmm? So this proviso, last one, this is no more relevant for you that the company body corporate existing on the commencement of this segment. We are talking about 2013. So that 2 years period is already over. You can simply put a cross that this particular proviso is not relevant for you. So what is called a financial year, that makes a difference because that will determine when the AGM of the company should be held. First of all, this point should be clear to you. What is a financial year? So let us draw a chart on this. So here we will have financial year. First financial year and subsequent financial year. Subsequent financial year, this you can say that this is a period of 12 months. And this is ending on 31st March. First financial year, that depends upon when the company is incorporated. Multinational companies, to what extent those are governed by company law? Those are foreign companies. And foreign companies are not governed entirely by the Companies Act in India. Very limited provisions are applicable. Okay. So for the first financial year, we will have a partition like this, that incorporated between 1st April and 31st December, and then incorporated between 1st January and 31st March. Okay. Now let us take an example. For example, 20th November 20. And in this case, and this company is incorporated on 20th January 2020. So this company is incorporated between 1st April and 31st December. This company incorporated between 1st January and 31st March. End of financial year, this will be 31st March 20, and this will be 31st March 2021. This is the difference. And this is relevant for the first financial year only, not subsequent. The date of AGM is certainly associated with the end of financial year. So that's why you have to understand, first of all, when the financial year ends. And only then we can talk about other provisions. So is this clear? Subsequent meeting. I haven't even spoken about the first meeting with the question of subsequent meeting. Now, AGM. Now, AGM first AGM and subsequent AGM. First AGM within 9 months since end of financial year. And not compulsory in the year of incorporation. Like we had the example that the company is incorporated on 20th of November, so there cannot be AGM in the year of incorporation. Right. So for the first AGM, only one parameter we have, that it should be held within 9 months since the end of financial year, and when the financial year should end, that we have already seen. And subsequent AGM, here we have two parameters. Just a minute, somebody is calling. Hello. Hello. So subsequent, here we have two parameters in the year of incorporation. Yes. So here when we say in the year means we're talking about calendar year. Otherwise, when we use financial year, it means April to March. When we say year, it means calendar year. Okay. So not compulsory in the year of incorporation. So in our example, we had taken that company is incorporated in 20th of November 2019. There is no AGM in the calendar year 19. Okay. So that's what the note is. Then subsequently, we have two parameters. First parameter is within 6 months since end of financial year, financial statements have to be placed in AGM within 6 months. And then another one we have not more than 15 months since previous AGM. And when you count the time gap of 15 months, this is from the original date of the meeting. If the meeting gets adjourned, we will not take the date of adjourned meeting. This date of time gap is to be counted from original date. Incorporation date 20th January 20, financial year 31st March, AGM date will be 31st December 21. Yes, that is the latest date by which you can hold. Right? That is the latest date by which you can hold your AGM. So here subsequent, this saying first or rather within 6 months from the end of financial year and not more than 15 months since the previous AGM, and out of the two automatically it will become whichever is earlier, so that you can comply with both the requirements. And in this case, no extension is allowed. In a subsequent AGM, ROC may allow extension of time. For first AGM, there is no extension. For subsequent AGM, extension may be allowed by ROC up to 3 months. And when the extension has been allowed for subsequent meeting, the extended date of AGM will be taken into account for the purpose of computing the time gap. Are these points clear? What is the time limit for holding AGM? So we'll complete this section, then I'll have 5 minutes of break for tea, and then we'll continue. So let's go back to the sharing portion. Yeah, already explained, and now going back to the same page where we were, and that was page number 136. Go to there and close. Subsection 2, I have written the word DTP. DTP stands for date, time, and place. Date, time, and place. The day has to be a day other than a national holiday. Time for commencement, extension is not mandatory. When you say extension can be granted, it is the choice of the ROC and depends upon his satisfaction on satisfaction is only one thing. This is called a satisfaction. Now, those who understand this, they can understand better. What is the meaning of satisfaction? If ROC is satisfied fully, any extension can be taken. And if it is not satisfied, there are a number of reasons for not giving you extension. So the time day has to be any day but other than national holiday. And the time is only for commencement. This cannot be for the closer between 9 a.m. and 6 p.m. So let's see here. What is said is meeting shall be called. Called means what is the time given in the notice. In the notice you will give this time because you cannot say that all the subject matters in the meeting should be concluded within this much of time. So it is only the beginning time, not the end time. And the time between should be between 9 a.m. and 6 p.m. And preferably it is required to be either at the registered office or within some city or town or some other place within the same city or town where the registered office is already situated. Now the proviso is there. This is provided that annual general meeting of unlisted company. It is not saying private company or public company. As long as it is unlisted, all private companies are unlisted companies, and a public company which is not made a public issue, that is also an unlisted company. So all unlisted company may hold there at any place in India if consent is given in writing by or by electronic mode by all the members in advance. So the requirement of holding AGM at the registered office or some other place with the same city is mainly for listed companies. Unlisted companies, with the consent of all the members, that too in advance, also very important word, in advance. You cannot say that this resolution or this permission was taken from the members in the general meeting itself. So get this approval in advance, and then the AGM of an unlisted company can be held anywhere. So that was section 96. In section 9, what we talked about the day, time, place of AGM and when the AGM should be held. And this is the time for to take a small break. The chat is on, but video will be off and camera and mic will be off. Okay, so if you have to write anything, you can keep on writing. In the meantime, I'll prefer to have a cup of tea. If you want to have, you can also have it. So now time to start talking again and back on camera. So what I was asking in between that how many of you are doing writing practice? Writing practice is crucial for passing any exam as long as the exam is in writing. If it is MCQ based exam, it's okay if you don't write. If it is an online exam, it's okay if you don't write. But when exam is on writing, and if you don't have a writing practice, what will happen? Lots of students are not able to complete their question paper. Not online, I'm talking about this. I'm talking in a general. I'm not talking about only CS. Minimum writing practice 10 pages a day. You know how much I write while I'm teaching throughout the day? Every day, minimum 30 to 40 pages I write. And I want you to write only 10 pages a day. If you follow this practice in long term, that will make a huge difference in your entire life. Huge difference it will be. Okay. Joining or being a part of the group is a matter of your choice, but I'm trying to help most of the people. Power of the tribunal to call annual general meetings. So see it here. It is very, very interesting. Section 97 says if default is made in holding annual general meeting. So as long as default has not been committed, as long as time limit given under section 96 is there, tribunal does not have any power under section 97. The tribunal have power only where the default has already been committed by the board of directors. So where the default has not been committed, this section is not applicable. And if the default has been committed, the tribunal may, notwithstanding anything in the act or articles or the on application of any member, who can apply? Application of any member. Right. Either call or direct the calling of annual general meeting of the company and give any such ancillary or consequential directions as the tribunal thinks expedient. Provided that such direction may include a direction that even a one person present in member or proxy is valid and the company held in person subsection 1 is valid for every purpose. Now read subsection 1 this very carefully. What it says. How the power can be exercised by the tribunal. There has to be an application for that. Under section 97, there is no CO moto power available to the tribunal to call AGM on its own. Read it again what it says. If a default is made in holding the AGM under section 96, the tribunal may, notwithstanding in the act or articles on the application of any member, either call or direct the calling of AGM and give such ancillary and consequential direction as it thinks fit. So this is not only in relation to so I have already shared a link to join the group. Now I am not adding anybody. Follow the link and you can join. So here, not only in relation to holding the AGM, not only for calling the AGM. Wherever there is a problem, calling the AGM is a problem, apply to tribunal. Holding the is a problem, then do that. Any default under section 96 that may be about the place, the day, or anything else in relation to anything, not only convening or holding, but application is compulsory and any member can apply for that. And this further says, provided that such a direction may include, this is the maximum extent what is said, in the general proxy is not accounted for the purpose of quorum, but here it is being said that tribunal can tell you that even if one member present, either in person or proxy, that shall be taken as a quorum. That will be taken as a meeting. And a general meeting which is held as per subsection 1, that is as per directions of the tribunal, that is valid for every purpose. Okay. Then next section. Now this is a note for AGM. Section 98. This is not for AGM. This is already saying other than AGM. This is extraordinary general meeting. Okay. So I can add it here. Only for AGM. And this we can write in red color so that it becomes more clear. So this is not for AGM. So this is if for any reason it is impracticable to call a meeting. Impracticable is a different word. There can be number of members, but there are mutual difference of opinion. Because of that, it cannot be done. There can be a problem in relation to the place. There can be problem in relation to the subject matter. Any number of issues because of which convening, holding, and conducting the meeting is becoming difficult. This section is saying that. So if for any reason it is impracticable, this word is important. To call a meeting of a company other than AGM in any manner in which meetings of the company may be called or held or conducted, the meeting of the company in the manner prescribed in the Act or articles of the company, the tribunal may either suo moto. Now in AGM, there is no suo moto power. AGM can be called by the tribunal only on application of a member. Here, the power can be exercised either suo moto or application of any director or member. But they should have a right to vote in the meeting. In AGM, in the previous section, we simply said on application of any member. Here, directors are not mentioned there. Under section 98, this says the tribunal can act either suo moto or application of any director or member, and member should be eligible to vote in the meeting. Then only he can apply. I hope the differences you have noted with. Compare section 97 and 98. Write a question. Compare section 97 and 98. That is a question only for your understanding. It is not exam-oriented question, but that will make a clarity. Compare section 96, or so rather 97 and 98. So here also the tribunal can give any kind of direction for calling, holding, and conducting the meeting. It can also issue ancillary direction. Here also it can say the single member presence will be quorum. And subsection 2 is same. Punishment for default, that if the directions are not followed, if AGM is not done or any directions given by the tribunal are not followed, what is the penalty? That is section 99. Then section 100. This is EGM. So by chance, the section 98 has been given in advance. That should have come after section 100, but let it be. Let us forget that. Extraordinary general meeting. What is extraordinary general meeting? Any meeting of members of the company other than annual general meeting will be referred as extraordinary general meeting. Any meeting other than annual general meeting, right? So section 100 says who can call AGM or rather EGM, when and where EGM should be held, day, time and place, subject matter, requisition, all that we are going to talk about. So as far as section 100 is concerned, they say the board may, whenever it deems fit, call an extraordinary general meeting of the company. So subsection 1 has given a statutory right. I have to stop this for a moment. So sorry, friends, some matter came up urgently, so I had to attend to that. Now going back to sharing. So here we are talking about that how the EGM can be called and held and for what purpose. The board has been given a statutory right. Right. So earlier in the old law, the board did not have the statutory right. By chance, if you happen to refer old answers, you will be able to understand correctly what is the law. So in this act, or rather Companies Act 2013, the board has been given a right. It is a statutory right. Now they can call EGM whenever they deem it fit. The question is why the EGM should be called. Simple. Whenever members' approval is required urgently for any matter, for which we cannot wait till AGM. And number two, the subject matter shall not be reserved for the annual general meeting. Like Annual financial statement only in the AGM. Dividend only in the AGM. Retirement of the directors only in the AGM. Appointment and reconfirmation of the auditor only in the AGM. So two things are there whenever members' approval is required urgently, for which we cannot wait till the AGM. And number two, the subject matter for which members' approval is required is not reserved only for AGM, then AGM can be called. The board has been given a right. And further provisions provided that extraordinary general meeting of the company other than wholly owned subsidiary of a company incorporated outside India shall be held at a place within India. So where there is a wholly owned subsidiary of a foreign company, AGM should be in India, right? Otherwise, AGM can be outside India as well for a wholly owned subsidiary of a foreign company. So here you can get a message that as far as AGM is concerned, that simply said that either at the registered office or some other place, and with the approval of all the members taken in advance, that can be held at some other place. Here that time of place was not given. It is simply said that except in case of a wholly owned subsidiary of a foreign company, the EGM should be held in India only. Right? Then subsection 2 says on requisition. Requisition is what? Requisition simply made a request made in writing. Request made in writing, and who can make the request? It depends upon whether company is having share capital or company is not having share capital. If there is a share capital, then members holding not less than 10% of the share capital, and in case of company not having share capital, the 1/10 of the total voting power. In either case, it is more or less same meaning, more or less. Right. Difference is that in case of a share capital company, one person is holding larger number of shares, he may be holding 10% of the total paid up capital. In case of a company not having share capital, the voting power is only with reference to number of members. So one person, one vote is always there, nothing else is there. So in case of company having share capital, member or members holding not less than 10% of the paid up share capital, they can make a requisition. And in case of company not having share capital, members being not less than 10% of the total voting power, they can make an application for calling and holding the extraordinary general meeting. That is the requisition. Now, what is the requirement of valid requisition? Here we will see something more. Number 3. So when a request is being, you cannot simply make a request and call an EGM, we will enjoy that. The subject matter, the resolution proposed to be taken up in the EGM, that should be given in the requisition. For what EGM has to be called? The requisition, the people, those who are making the request, then the eligibility criteria must be satisfied on the date of submission of the requisition. Otherwise, requisition is invalid. What will happen if the people those who made the requisition at that time they fulfill the requirement of 10% of the share capital and subsequently some of the shares are sold, or they want to withdraw the requisition? What will happen? So validity of the requisition is to be seen as on the date of submission of the requisition. What happens subsequently, that is not important. Some people leave thereafter, some people withdraw thereafter. That doesn't make a difference about the validity of the requisition. The requisition has to be signed by the members who are holding not less than 10% of the paid up share capital of the company as of the date of submission of requisition. Any subsequent change does not affect the validity or invalidity of the requisition. And the subject matters for which EGM is to be called, which is to be placed in the EGM, should be a part of the requisition. And when the valid requisition is received, when the board receives a valid requisition, the board should initiate the process of calling EGM within 21 days. Refer subsection 4, what it says. So the board does not within 21 days from the date of receipt of the valid requisition in regard to the matter proceed to call a meeting of the consideration. So what it indirectly means is that when a valid requisition has been received, the board should issue a notice for calling EGM within 21 days after receiving the requisition, and the EGM should be held within 45 days since receiving the requisition. So effectively 24 days notice is there. So 21 days notice plus time of dispense, so that is the old concept. It is not now. Earlier, now the notices are sent digitally, and those are deemed to have been delivered on the same day when those are sent. right? So, but the old concept continues that the board should start the process of calling the meeting within 21 days since receiving the requisition, and the meeting is required to be held within 40. And if the board fails to take the action within 21 days, then the requisitionists themselves can convene the meeting. Come to subsection 6. A meeting under subsection 4 by the requisitionist. Here, subsection 4. If the board does not within 21 days from the date of calling the meeting, so they have to start the process within 21 days. And if they do not, then the people, those who made the requisition, they themselves can call the meeting, and all reasonable expenses incurred by them should be reimbursed by the company. Okay, so that is about annual general meeting as well as extraordinary general meeting. Extraordinary general meeting can be convened by the board, and it has to be convened by the board on requisition of members. If they do not do, then requisitions can do by themselves, and tribunal can also call. When a requisition is made, the people who can make the requisition, they are called requisitionist, and they are members only. In case of company having share capital, the members holding not less than 10% of the paid up share capital, they can make a requisition. And in case of other companies, that is where there is no share capital, members holding 10% of the total voting power, they can make a requisition. And validity of the requisition is to be seen as on the date of submission of requisition. Any subsequent change in the and if any of the requisitions changes his mind, that does not affect the validity of the requisition. The subject matter for which the EGM is to be called should be specified therein. That will be a valid requisition. And when a valid requisition is received by the board should initiate the process of calling the EGM within 21 days, and the meeting is to be held within 45 days. And if the board fails to take action within 21 days, and if the meeting is not held within 45 days, then the requisitionists themselves can call EGM, and all reasonable expenses incurred should be reimbursed by that company. The requisitionist meeting should also be completed within a period of 3 months since the date of submission of requisition. So you can say first 45 days have been given to the board, and next 45 days have been given to the requisitionist to call the EGM. So that is about the extraordinary general meeting. So before we proceed, we can have some discussion on the question answer. So if you have anything, you can ask me now. Can you hear me? Do you have any questions? Can this time the annual account signed in different places by a director? Two directors in a company, one for how the board meeting conductor for signing the balance sheet. Balance sheet approval is in the meeting. Signing can be done later on, and directors can certainly participate through the audio visual mode as well. Signing can be done later on. Signing is not required in the AGM in the board meeting itself. Appointment of auditor, yes, that can be done in the AGM as well, but only in case of casual vacancy. 21 days we'll discuss now in the next provision, where we're talking about the AG notice. Anything more? Fixing of remuneration to the directors, not compulsorily in the AGM. Directors can be appointed otherwise also. Approval, minimum number of directors are required to be present physically. Other directors can participate through the audio visual mode. If AGM altogether not done in advance, then penal provisions are always there. plus any member can apply to the tribunal for calling and conducting the AGM. Place of the director means what? Interim dividend can be declared by the board. For that, you don't need EGM. Final dividend is only in the AGM. Because financial statements are approved there. All the place of the meeting is not clear. Ordinary business can be conducted at AGM. So I have not spoken about the ordinary business, special business till now. Interim dividend can be declared in AGM, not required. Board can do that. What is the case of subsidiary company of the holding company of India, which is situated outside India, place to conduct AGM by the subsidiary company wherever they want. Ultimately, the company cannot be situated outside India if it is incorporated in India. Timing of conducting AGM, no time limit is given there. Time is only for the AGM. Public company shall hold AGM anywhere in the world. No, public company can hold and with a specific permission from all the members within India. So I think the time for AGM is only for starting the meeting. That is not for conclusion. You cannot. You can continue up to late hours after 6 also, and by chance if it is not completed, you can adjourn the AGM and do it continue later on. Declaration of dividend, how can it be compulsory? Dividend is the share in the profit. If there is no profit, there is no dividend. It cannot be compulsory. Subsidiary company is a separate legal entity that can hold separately. Including wholly owned subsidiary, it is same. Ultimately, it is a separate legal entity. CEO is not under the Companies Act. Report shall be given to SEBI, not required. Okay, so let's proceed further. Otherwise, and here we come to the notice of the meeting. So, notice is a general meeting may be called by giving not less than 21 days notice. So time gap between the date of giving and date of receiving should be 21 clear days, provided general meeting shall be called by after giving shorter notice, less than 21 days, but for that 95% of the members or 95% of the voting power should agree. So in general, notice should be 21 days prior to the date of the date of the meeting. So date of the meeting is not a part of these 21 days. The date on which the notice is sent, that is also not the part of these 21 days. So 21 plus 2, that is minimum time we have required. So as of today, you can send it but digitally, and when it is sent it digitally, it is deemed to have been delivered on the same day. So date of delivery or date of sending, that is to be excluded, and date of meeting, that is also to be excluded. Then by chance, if the time is less, if the 21 days gap is not there, then you need to have the approval in writing, or by you can take it by approval by electronic mode. At least 95% of the voting power that should approve the shorter notice. Now, subsection 2 says every notice of the meeting shall specify the place DTP, where, when, where, and whatever time. So DTP has to be explained in the notice, and this subsection 3 talks about the notice of every meeting of the company shall be given to whom notice should be given to the member, auditor, and every director of the company. These are the persons to whom this are to be given. This explanatory statement, this is something important for practice also, because for in relation to every subject matter of a special business, there has to be an explanatory statement attached with the part of the notice. So when we say attached with the notice, so this is a part of that notice. What should be written therein? A statement setting out the following material facts concerning each item of the special business to be transacted at the general meeting shall be annexed to the notice calling such a meeting. Now, this is important word. What is the difference between annex and attach? What is the difference? Can somebody tell me? Let me add the word here. Explanatory word is not there originally. I have added that for every item of special business. Something more I have added. So when we annex something, it becomes a part of the original document. So explanatory statement will be a part of the notice. And when we attach something, then that is a separate document. In relation to auditor's report, you will always find that it is attached. It is not annexed. In relation to explanatory statement, we are saying that this is, yes, attachment is a separate document and annex is a part of the main document. Okay, so here explanatory statement is annexed. So that's why we always specifically say that explanation for the subject matter is given in the explanatory statement forming part of this notice. So when people don't understand the difference between annex and attach, that's why it is clearly mentioned in the notice that the explanatory statement is forming a part of this notice. So for you, what is important is what you should write in the explanatory statement. The nature of interest of any director on the key manager, personal relative, etc., any other information. Just let me see if all the information is given there or not. How to write explanatory statement? So what to write in the explanatory statement? Here I can show you that. Okay. In the text box, take this one. And what I'm writing here that you can make use of for writing the explanatory statement. Right? Number one. Subject matter in brief. Okay. How to write explanatory statement that I'm giving you explaining here. Can you hear me clearly? Okay. Number two, reference of the provisions of the Act. Okay. Number three, brief background of the subject matter. Number 4, type of solution required. Number 5, end of, let me make it a little bigger for you. Interest of directors. Hello. बेटा पहले बताना चाहिए, अचानक मुझे बोलोगे मैं शट डाउन कर दूंगा सारे के सारे लेक्चर। नहीं नहीं, लेकिन ये आज ही दूसरी बार हो रहा है, आप मुझे एडवांस में अगर आप बताएंगे तो ही ये होगा, अदरवाइज मेरे लेक्चर बीच में डिस्टर्ब नहीं होगा। या कुछ भी हो, आप मुझे एडवांस नोटिस देंगे मीटिंग कितने बजे लेक्चर खत्म होना है। ये कोई तरीका अचानक आप मुझे बोल रहे हो मीटिंग लेक्चर रोकना है? नहीं नहीं, कर लीजिए, नहीं बेटा कोई तरीका नहीं है बात करने का। कौन है कोऑर्डिनेटर जब मेरी बात करो उससे? कैसे भूल गए आप इस बात को? बेटा ये आखिरी टाइम ये मिस्टेक है, मैं अभी यहाँ पे लेक्चर रोक दूंगा 5 मिनट के बाद, लेकिन आइंदा अगर ये गलती हुई तो सारे लेक्चर आपको हमेशा के लिए बंद करना पड़ेंगे, ध्यान रखना, मैं हंगामा मचा दूंगा इंस्टीट्यूट में। बेवकूफी की हद होती है यार। So these are 5 points. If you mention these 5 points one by one, even if you write one line for each, your explanatory statement will be perfect. And if you are not mentioning all these 5 in this sequence, right? Sequence slightly you can no actually. Okay, no change. Sequence will also be will remain same. Your explanatory statement will be perfect. Is that clear? Okay, and this is required to be given with reference to every item of special business. Institute has requested for closing of the lecture now at 10:45, and I have told them that this is the second time it is happening if the lecture is being disturbed without a prior notice. It will not happen again. Okay, homework is there. You have to write at least 3 or 4 explanatory statements for a subject matter of your choice, but in this manner. Write it properly, send it to me. I'll tell you whether it is correct or not. Right? It doesn't require too much of explanation, just 5 points in sequence, and your answer will be complete. Okay, thank you very much. I'll meet you in the next lecture.